Can you look me in the eye and tell me that if you needed care tomorrow, if you couldn't dress yourself, bathe yourself, or get out of bed, that you wouldn't be a financial or emotional burden to the people you love most? Because that is exactly what we are talking about today. We are talking about the what if that keeps you up at night. Long-term care insurance. Is it worth it? Or is it just another way for insurance companies to drain your hard-earned retirement savings? Listen to me. Your greatest asset isn't your home, and it isn't your 401k. It's your ability to live a life of dignity without being a burden. But here is the problem. Most of you think Medicare is going to save you. You think, Susie, I've worked hard, I've paid into the system, I'm covered. No, you're not. Medicare does not pay for long-term care. It might pay for a few weeks of skilled nursing if you're recovering from surgery, but for the long haul, for the years of help you might need just to live, you are on your own. And let's talk about the fear. The fear is real. The cost of a nursing home or even 24-hour home care in 2026 is astronomical. We are talking $100,000, $150,000 a year, or more depending on where you live. If you haven't planned for this, one illness, just one, can wipe out everything you worked 40 years to build. It can leave your spouse penniless and your children heartbroken because they can't afford the care you deserve. So, is it worth it? The answer isn't a simple yes or no. It depends on who you are. If you have less than $200,000 in total assets, you probably can't afford the premiums, and eventually, Medicaid will have to step in. If you have over $3 million or $5 million, you might be able to self-insure, meaning you have enough cash to just pay the bills as they come. But for the millions of you in the middle, for those of you with $500,000 to $2 million, you are in the danger zone. You have too much to qualify for help, but not enough to lose $150,000 a year for 5 years. For you, insurance isn't just an option, it's a necessity for your peace of mind. Now, when should you buy it? Don't you dare wait until you're 70. If you wait until you're 70, two things happen, and neither of them is good. First, the premiums will be so high they'll make your head spin. Second, and more importantly, you might not even qualify. All it takes is one blip on a medical exam, one high blood pressure reading, one minor forgetful moment recorded by a doctor, and the insurance company will show you the door. The sweet spot is between ages 55 and 65. That is when you are young enough to lock in a lower rate and healthy enough to actually get approved. But I want you to be careful. In 2026, we are seeing premiums rise by 20% or even 50% on old policies. The insurance companies underestimated how long we are all living. So, if you're looking today, you need to look at hybrid policies. These are policies that combine life insurance with long-term care. Why do I like these? Because if you never need the care, your beneficiaries get a death benefit. The money isn't gone. It stays in the family. It's a way to make sure that your premiums aren't just a loss if you stay healthy until the day you die. Here is your actionable takeaway, and I want you to do this today. First, sit down with your spouse or your kids and have the uncomfortable conversation. Ask them, if I need care, who's going to provide it and how will we pay for it? Second, check your health. If you are healthy right now, that is your green light to shop. If you wait for a diagnosis, the door is closed. Third, look for a policy with inflation protection. A $200 a day benefit sounds great today, but 20 years from now, it'll be pennies. You need that benefit to grow as costs grow. Stand in your truth. Don't live in fear of the what-ifs. Take action now so that you can enjoy your retirement knowing that no matter what happens to your health, your dignity, and your family's future is safe and sound. With that said, thanks for watching, and until next time.